Hey traders, Nick recapping June 1st, first day of the month, recapping the week, and what an eventful week. It was truly incredible. So let's start with Friday. Friday's a green day by any accounts. Plus 1% on most indices, plus 1.5, 1.6% on the Qs, led by the mega tech and chips and all of that. So a lot happened on Friday. We had a big dip in bonds, so I shared some trades yesterday or this morning. It depends on where you were. And I don't design them to be this fast, but they deliver profits right away, so I have to trim and or close based on my portfolio. I have too many longs, so it all depends on the personal portfolios. But I don't design them to be this fast, but sometimes they come this fast, and I have to stick to my guns. All right, so we did see an inverse head and shoulders in the SPY, and we said that they could be setting a right shoulder, and they did. You know, my shoulder was drawn differently, but I couldn't tell you how deep they wanted to go, so they went as deep as this one, which is almost a perfect inverse head and shoulders, which is a bullish. And usually the rally is as big as this. To me, I look left, and there's going to be resistance where we are right here from this box, but the eventual target should be somewhere around here. Which will bring us to about 27.55, if you remember, in the SPX, not the SPX, the E-minis, which is about the SPX. And I said if that gets taken out, then 27.90.92 is a possibility. I don't want to jump the gun. Today was a relief pop. We didn't have any bull crap coming from Italy and Germany, etc. We still have all the headlines above our heads. We're still in headline trading. So yeah, the week was positive all the way around, except if you're fear, which I will show you that. But the headlines are still there. So if you ask me on Monday how we're going to open, I'll tell me what the headlines are going to be. If there are no headlines or nothing new, then we meander higher. The fundamentals are stronger than people are fearing. So we saw the jobs report. Everybody and their brother is working, and their sister. We have unemployment rates that are at incredible lows, 18-year lows, I think. So here's fear. That's the VXX. It's one of the derivatives. So if fear loses this, then it's on its way to completely erasing the 2-2 fear candle. This was it. Right here is where the correction started. Friday jobs report was strong. Markets collapsed. Friday jobs report was strong. Actually, somebody said it was on fire, and we loved it as stocks. Go figure, right? Strong jobs report, spike in rates. At this point, nobody's worried about rates because they're worried about tariff wars. Okay, so Monday's a coin flip, but if there's no headline or nothing new, then we meander higher. Period, end of story. All right, so let's delve into the details a little bit. I do have a few charts in mind that I need to share. What happened to my watch list? There it is. Come on, come on. Okay. I have a little lag in my platform. So, this is the ES version of the SPY breakout. If you remember in the morning note, I said the S&P is too tight and we're breaking out. But I will look to resistance here, which also matches that white box I showed you in the SPY. Okay. But prior resistance is an opportunity if they can break above it. Higher we go. All right, so my warning is for crude oil. Those long oil should worry because my opinion has always been anything above 55, 56 is too high for OPEC's market share. So they will start rhetoric that is negative pricing. And in fact, they did. They declared war on it recently, and I noted it. And here it is falling. Now, technically, if that yellow line-ish gets lost, now we have a head and shoulders. You know, the opportunity in the SPY was an inverse head and shoulders that was bullish. The head and shoulders, the right way up, is a bearish. But in this case, kind of like this is one shoulder, this one whole thing is a head, and this is one shoulder. Think about it as an inverse cup and handle, also bearish, meaning the bulls tried and they took their time, got back to here, neckline. Bull said, I can do it again. They failed miserably, nowhere near the first time they tried. So they get back to the neckline. If they lose the neckline, that tells me that the bears are tired. The bulls are tired, and the oil bears, will prevail lower. And the move lower could be quite severe. But the first stop would be somewhere around here. Why? Because this was a pivot point from before. I think they can still talk it down all the way down to the 50s, high 50s. Not a forecast, just a concern. Okay. Now, the XLF banks, I went long banks that day that they shorted them 4% this day right there. I was like, Citigroup down 4%. On what? No way. So I sold puts in Citigroup. Some of us bought calls. I bought calls in the XLF and sold puts in Citigroup. So those puts were completely big wins. I sold them, collected $1.35. Now they're like 80 cents or 90 cents to buy back. So I could book that, but I'm not worried about it. I also bought calls and they're up a lot this morning. I think they were up 30%. So I may have trimmed some people may have trimmed. I still see the opportunity here, this big gap. Maybe it gets closed, but there is resistance. That white box is a pivot point, so it presents some resistance. Fundamentally, they are cheap, cheap, cheap. They can get cheaper, but they are cheap, cheap, cheap. Okay, so this is risk I'm willing to hold, especially the sold puts. Okay, the other trade that paid pretty quickly, which is long the TBT, which is really shorting bonds, because the TBT is an inverse TLT basically. So today we had a big pop at the open, but now it's fading a little bit. So, I was hoping it reaches here with all these gap down here's. So it's still there, but it's not working my way since the open. So I may trim it or book it, depends on the portfolio. I still like it. I'm losing faith in shorting bonds at this point. This is bonds. Remember that big red area? I said something will happen in it because it's been pivotal for a long, long time. I think if I go on a monthly, it's probably it. Yep. So this zone right here, always been action filled. So careful being short that too much. Okay, so I have a whole slew of things which I will share in writing, and I will do a video for members, premium members, with a run of my watch lists with all the trades that are possible that I've done today. Some are already paying right away. Nick signing out. If you have any questions, let me know. You know where to reach me. By the way, before I forget, if you look at this whole chart, this is bonds. Everybody's been calling the death of bonds. This is a long-term look at bonds, 5-year, weekly. So it looks like a head and shoulders, meaning this zone, if it's lost, it will cause a big dip lower. So, but everybody's been wrong betting on that happening. But rates are rising. So if rates are rising, bonds have to fall at some point.